Hi, this is Dave, and welcome to the weekly market recap, closing out the week for Friday, August the 2nd, 2013. I'm recording this video on August the 4th, Sunday, August the 4th, 2013. So happy August long weekend, and I hope everyone's having a fantastic time. I've actually been on holidays this week, and I've been away from the screens, away from the markets. I've been just checking in, from time to time. I'm not really trading or anything this week, and just taking it easy, spending some time with the family. So looking at the markets this week, hopefully I've got some fresh eyes, some fresh ideas, and I can take a clean look at this market. So let's just jump right into it. I guess the big news this week, just looking at the charts, and not really relying on news, but just looking at it from a technical perspective, starting out with the Dow, is that we broke the recent highs, and we closed at new all-time highs again this week. So that is really it's pretty actually quite amazing. You can see the volume is just below the average volume on the volume indicator. So there's not a lot of volume coming into this market. We did have a lot of volume coming in around this area here, when we were sort of chopping around. And if you go back several weeks, we were looking for some downside, and then we sort of flipped the script on that analysis and said, well, this is really starting to look like a bullish flag continuation pattern, and if we break the top of this trend line, then we have to really expect that this is sort of a flag that's going to play out with a breakout to the upside and a retest of these highs most likely. So that's something that that was one of the scenarios that did play out. And in last week's video, if I'm not mistaken, we were talking about this pullback here. We weren't sure if this was going to be the pullback, that would ultimately hold and push higher. But that's essentially what's happened. This was a very bullish candle, and I've covered it now. This was a very bullish candle here, going into the I guess that would have been the close last Friday, if I'm not mistaken. And, it got bought up right off of that 18-period exponential moving average, closed close to the highs. It looked like most of the week was uneventful, where we just chopped around there. And then what I was talking about in the previous video was, we really need to get a move outside of this range here, because, we don't know if we're really going to get a lot of downside. We've got support underneath us. We have resistance overhead. So this was sort of, treat this as a dead zone and look for some guidance outside of this range. Well, we did get, we got some probing above that range, but then we did have a close. Now, one bar close above a resistance level isn't really enough. You really want to see, some decisive closing action above that level, a couple of days, a couple of bars, some strong closing. But to me, that looks like, we did close above the major resistance at around 15,565, which was the high. And if we look at some of the other markets, like, to me, this looks like, this to me just looks like the market wants to move higher. You do have some divergences in the background, where price is going higher, and the, like the MACD, for example, is going lower. The trending indicator is still net positive. The stochastics didn't really, they rolled down to the low side and then they crossed back over. They didn't really reset themselves like you would like to see, like something like this scenario or that scenario where they sort of bottomed out and then pushed back to the high side. They've just, in a trending market, you're going to see this sort of action where, they stay, high and tight in the oversold range. So, having said that, I think what we really need to do is look at some of the other, sister markets and see what they look like. Let's look at the S&P, futures. So the S&P futures, look really strong. I'm going to look at taking a lot of this stuff off of the charts because I know it's kind of confusing. But if you look at this last move and the breakout of the high, you've got the 1272 extension in play. And I mean this for the Dow as well. I mean this for all the markets. I think the 1272 is the next logical target. The extension of this this high, this low, and a breakout of that sort of cut pattern that we've been talking about over the last few weeks. Now that we've actually broke the highs, I think you know, the 1272 extension. In the S&P, it's around 1714, and then ultimately possibly the 1618 around 1758 is in play. Let me jump back to the Dow and see where those levels come in. The 1272 is around 1574, 740 rather, and ultimately around 16. So I think those levels are in play. That's sort of what the market, excuse me, looks like it wants to do. So the S&P looks very much the same as the Dow. I think it's actually looking a little bit stronger, where you've had two bars closing above those highs, Thursday and Friday. And if we look at the Nasdaq is even stronger. The Nasdaq's even stronger, where you have, you know, this, you had the pullback, and then you had this, you know, first you had the breakout, you had the pullback, and then, you know, you've already hit the 1272 extension of this move. And when I mean this move, I mean the 1272 extension from this high and this low, this sort of breakout. And it looks like we're going to be set to test, you know, 3184-ish in the Nasdaq. And, you know, if we continue this, it probably wouldn't take less, you know, until next Friday by the looks of it, provided we get, you know, continuation of movement to the high side in the market and we don't experience a pullback. This to me looks a little bit extended, but the market looks really strong. So I'm not really quite sure what's going to happen, but, you know, the market does look higher to me. Could pull back at any time. Let's take a look at the IWM, which tracks the Russell. And you can see here we had this sort of channel in play. Let me just extend this right and extend this right. And you can see here we were at the top of the channel. We did get a pullback. It wasn't a very deep pullback, you know, from a momentum standpoint, nor from a price standpoint. And now we're just, you know, we're having challenges with these highs at this point in time. So this kind of progression slowed down a little bit in the Russell, but it looks like the Nasdaq sort of has taken over a little bit in terms of, you know, strength and leadership out of all of the stock indices. So if we look at, let's take a quick look at Apple. This was something I was talking to some of my members in my live trading room, and I was looking at, once we broke out above, you know, we gapped up above this trend line here, this sort of downtrend, and it looked like we put in a double bottom, and it looked like, you know, we're putting in the makings of almost a reverse head and shoulders pattern. And to me, what it looked like was, once we broke out above this trend line here on this day, I think this was earnings actually. This was when earnings came out. We broke out. I was saying, you know, I think that Apple is going to test 470. And the reason why I thought it would test 470 was pretty logical from a technical analysis perspective, was just that it looked like, you know, we put in a bottom, and we've already tested the bottom. Momentum has shifted to the high side. And once we broke that trend line, as long as we held it, it looked like, you know, a test of resistance was the next logical level. Now, having said that, I really like this chart pattern, because this is really starting to look like a reverse head and shoulders. Now, to me, what this looks like is, you know, Apple had its heyday in terms of, you know, participation from a lot of large funds and a lot of retail traders, and then it got sold off hard. And then, you know, at some point, you know, the sellers are just exhausted, and there's really no one left to sell. So any kind of buying or lack of selling in the stock will just, you know, easily push it higher. So this wasn't quite what I would consider an exhaustion bottom, you know, where you just get a lot of volume coming in, but this was just a gradual, you know, slow death in Apple, and we came down to some key support. This looks like a complex bottom being put in, and now, you know, there's just really no one left to sell it. The selling has just sort of been, you know, it's really just been sold off, and now it's just, you know, kind of coming back to you know, some logical levels. So I think 470 is in play. It's already at 462, so that's, you know, not a far stretch. But having said that, I think if we can get above 470, I think that things are really going to get interesting in Apple, especially considering the strength in the Nasdaq. So what I would be looking at then personally is, if you look at, I'll just redraw these lines here. This was just, it's the same analysis, but just to explain it. Here's the high, here's the low. Looking for, let's say, a 50% retracement would bring you all the way back into $545. That's a normal market retracement of a down leg like this, a 50% retracement back to the high side. Now, if we actually look at this bottoming pattern and we look at where the high and low is, and we treat this like a box, and we say, okay, well, here's the box, and here's the measurement of that box. Here's the high of the box. Here's the low of the box. And then we project that box on a one-to-one basis. That takes us right into that zone as well. You can see it takes us right into 558. So there's some confluence there between different, technical analysis measurements in terms of looking for potential targets. So I think that 545 level, if we can get above 470, I think that 545 to 558 level is going to be a magnet, and I think ultimately we could even come up and test the 618 around 582. So as long as that goes with a caveat, insofar as long as the stock indices remain strong, then I think that this is this could potentially be in play. You can see that these levels also line up with some key support levels, which became key resistance levels going back. So I like this area from a confluence standpoint. There's a lot of levels that are coming together in there. I really like that. It looks like my trending indicator is going to at some point roll back to the high side. That would give me more confidence that the move is possibly going to take place. Now, I'm not expecting a break right through that level, although anything can happen. But what I'd really like to see is, let me just zoom back into, let me zoom right back into this chart, get a little bit finer detail. I would like to see this sort of scenario take place where it comes into here, pulls back into, like, let's say the 21 exponential moving average, and then pushes off, and then I'd be looking for ultimately a move into some of these levels. So I really like this. I like it from a box play sort of standpoint, where we're going to project upwards. I like it from a reverse head and shoulders sort of standpoint, and I like it from a just a Fibonacci standpoint. So when I see all those different kinds of methodologies come together and come into play, I really like it, and I think I've explained that as clearly as I possibly can. So let's move on to some of the other more major markets in terms of we don't usually look at individual stocks a lot. Let's jump over to the dollar index. I haven't looked at the dollar index in a while. So the dollar index looks like it started to catch a bit around support. We have the makings of a potential momentum shift back to the high side. So I'm not sure that we're actually going to come down and test these lows now that momentum is sort of coming back up to the high side in this sort of scenario. So what I'd like to see happen is, or not what I'd like to see happen, what I think is probably going to happen is we've got 8250 is a key level. If we can get back up above 8250, then I'd be looking for a push back up to the high side. Now, having said that, I mean, you've got to look at this as ultimate support is really at around $80.58. So it wouldn't be impossible for this to come back down and test this level and then push off. But it looks like we have the makings of a support zone, and I think if we get above, let me just switch the pen here. I think if we get above 8250 in this area here, I think we have a shot back to the high side. And then what we really want to see is, are we going to break out of this range? Because this range has just been developing. It's building up energy. And at some point, you've got to treat this as a non-trending range, and we need some guidance outside of that. Are we going to break to the high side, or are we going to break to the low side? At this point in time, it looks to me as though I would probably be leaning towards the high side. But having said that, you have to treat this like anything goes. once we break out of the box, then you're really going to know which way the macro direction is going to unfold. Having said that, we could really chop around in this range for quite a while. So at this point in time, I don't really like anything tied to the dollar index in terms of, let's jump over to the euro, in terms of, let's say, the dollar index or the euro as trending, let's call it as a trending market to look to take a trend trade from. So I think we're really just sideways. And looking at the euro actually looks, quite bullish, but it's overbought. So having said that, it's holding the 21 exponential moving average, and it looks more bullish than bearish. So, there's a lot of mixed signals here, and I think that in order to really look at this as, I think we just really need to treat it as a range bound market essentially, and look for a breakout of of this huge box that it's put in. And I mean, in the euro, it's between $1.2750 and $1.3414. That's a huge range. That's several hundred pips or ticks if you're trading the futures market wide. So at this point in time, I don't really like either one of these markets, but just from an analysis standpoint, consider it sideways. Look for a breakout, a decisive breakout of that, that long consolidation range. Having said that, let's take a look at the Darvis Squeeze and see if anything is really setting up in these currencies. So if we look at the, let's see, if we look at the euro, let me just reload this. If we look at the euro, we don't really have, we do have a weekly Darvis box, or Darvis Squeeze rather, setting up. And that's essentially what you have. You have this Darvis box on the weekly chart. You have this, sideways range, and looking for a breakout, of that box. That would represent a significant move. You can see on the weekly chart, the MACD is just really holding the zero line, which is just neutral. So at this point in time, I think I'm going to need to check in on this. I think this chart is really going to be important going forward, because if we get a break of this this Darvis box on the weekly chart, I think we're really going to get quite a move. So we really need to watch this going forward. It's just really building up energy at this point in time, and I think I've beat that one to death. Let's look at the gold market. So the gold market, I've been more bullish than bearish on it. It looks like we had a quick pullback all the way to 1280 is it? Around 1280, 1282. So this area here, to me, that pullback and that quick pullback and the holding of that level, I think is going to be the major support. You can see we broke out above that range, and all we did was come back and test it, and then we got a bullish hammer all the way back up to the high side. So what I'd be really looking for here is I want to see it get back up above that trend line. It's not a clean trend line, but I'd like to see it push back up to the high side, get back up above there, and then I'd be looking at 1380 and maybe 1400 as potential targets. We have a lot of resistance. We have a lot of resistance in this area, so I think I'd be looking around. I'd be looking for 1380 is essentially what I'd be looking for on the break of that kind of trend line there. So I hope that makes sense. Let's jump over to the silver market. Let me just zoom in here. Silver did sort of the same thing, and it's really going sideways. Same analysis is in play, except that now we've put in a higher trend line there with this doji closing on Friday. So a break above there I'd really want to see a move back into $22. I think is going to be the key level. I'd like to see a move back into $22 if we break that this trend line to the high side. I'm not sure why I'm using this crazy pen today. Let me just lock this one in. Okay, so we've looked at some of the metals. Actually, let's look at the copper market. So the copper market is building an interesting pattern here, where it's just been going sideways, but it's been putting in these sort of minor higher lows off of this low. And to me, what it looks like is if it breaks this trend line back up to the high side, that's really going to signify the major move. So if we can get above, let's say, $3 and I'm going to call it $3.20 in the copper. If we can get a decisive close above $3.20, I think that's really going to precipitate a move up to 340 and maybe even 360 or somewhere around there. And I think that is going to be, that's really going to be a game changer for the metals. I think if we see that move in copper first, then I'd be looking for strength in the other metals. A 50% retracement would bring us right into $3.40. A 618 would bring us into 349, 350. So I like that zone in terms of areas that copper could potentially look at testing. So let's jump over to the let me just look at another currency. Let me jump backwards for a minute. So let's look at the USDCAD. We were talking about it holding that 618, and we were expecting some sort of a move similar to these measured moves here. We've been talking about that going back, in the last few videos. So we went a little bit deeper than I was expecting to go in order to find some support. Here was the trend line, and we sort of built a little box or a base of support here where we weren't really going any lower. We broke through it a little bit in terms of where the major support was. And then you can see we broke this downtrend line. And what I really like to see here, now you've got a momentum shift potentially back up to the high side. So, I'm looking to see if this measured move is going to play out and we could get a move, to put in a new, to put in a higher high here. And I've been looking at targets around $1, potentially $1.08. So if we get those targets, I would consider the move done. If we fail to break this high, and then we come back down and break this low, then I would consider the move failed as well. So, or I consider the move, done. So that's what I'm looking at here. It's been taking a long time to play out, but you can see we've built some strength in here, and we're pushing back up to the high side. So that's sort of what I'm looking for. Retest of 106, ultimately 108. So we'll see if that's going to take place or not. And I think at this point in time, this is going to be the major support right at this low, 102. Let's call it 102.45. And let's move on to another market. Let's look at the crude oil. So the crude oil, I was looking for a push back up to the high side and potentially continuation up to 110 to 115. We've been talking about 110 to 115. You can see here we broke this minor downtrend line. We had a really strong day back up to the high side on Thursday. On Friday, it looks like we tested, these recent highs and we couldn't get through them. So I'm looking to see if if we're going to put in a double top here and then come all the way back down to this trend line, or if we're going to, break this this high 108.73, call it 109, and come up to some of these higher levels. So for me, those are sort of the decision points. I don't think that this is really that tradable. Even a breakout here, I think you would need to keep your risk fairly contained and tight, because the move is really substantially underway. And it's just a question, is it going to play out all the way, or is the move done at this point in time? So if you're not on the move already, I'm not sure that, me personally, I'm not sure that the risk reward makes sense all the way up here. Now, if you get a move into 115, it would potentially make sense using tight risk, but you don't really know that you're going to get that. So at this point in time, I'm just sort of standing on the sidelines and watching this from an analysis perspective and seeing if, this is going to play out or not. But I would consider this move, we were talking about, the breakout of 97. So if this move had been, if we had participated in this move all the way up to this level, I would consider it substantially done. So from a risk reward perspective, I'm not sure that it makes sense anymore. I hope that makes sense. Now let's look at the natural gas. So the natural gas did not, we had sort of a false signal where we broke out and we were looking at tests of higher levels. Once we broke this low around 350, that was just like, okay, it's not happening. The move is over. So now I think what we'd be looking at is to see if we're going to hold, if we're going to test and then ultimately hold $3.25. So I think this is the major support coming in here. $3.25. We're pretty close to it. I think it might, be like a magnet. We might test it. At that point in time, I'd look to see if we're going to test that and get a momentum shift back up to the high side, and then that would potentially be a tradable level. Taking the two into consideration: support plus, momentum shift. So if we got those two, or if we saw those two sort of scenarios taking place, then I would consider that, a fairly decent area to look at, to look at a potential long. So I'm going to be keeping an eye on that. I'm not sure that I'll trade it. The natural gas market is pretty crazy, and I don't know. It kind of wiggles and wobbles all over the place. So I'm looking at that. 325 is a potential area. Not sure that I'm going to trade it, but I'm definitely looking at it, and I'm definitely potentially interested. So let's look at let's look at the 30-year bond. So this has been a pretty tough market to gauge. We've been talking about higher levels in the bonds. Ultimately, we wanted to potentially look at, shorting somewhere in this zone between 137 and 139. I thought that the market was going to get up there when this scenario was taking place. And what we really did get here, though, was we had some failure here at some resistance levels, and momentum didn't quite top out. And now we're right back down into this level here. So this, in terms of shorts, this makes me a little bit nervous, and I'll explain why. So when you see this kind of scenario take place where you have a low and then it comes down hard into that level, and then it tests that low, it goes a little bit lower, and then it gets bought right back up right away. This area here, you have to look at this as a fairly strong support level. So this level at these lows around, I'm going to call it let's call it 132. I know it's not exactly 132, but let's call it 132. So you've got this support level, say at 132. It looks like a fairly strong level. That's going to be sort of where the line in the sand is, where the rubber meets the road. And what I'm looking at here is on the daily chart, this could be a potential support level to push back up hard to the high side. And it also could be a level where we come back down hard and we fail. So we really need to watch this level. And one of the things that I want to do is come over to some of the higher time frame charts. Let me just change this to a weekly chart. And if we look at the weekly chart here, you can see that this is starting to look like a strong support level, because we have, this was resistance. It broke it. It came down, support right off of this level. And you can see now we've come into this level twice, and this looks like a pretty strong support level. So at this point in time, I think if we're going to look at shorting this market for any real downside, we really need to break that level. But you can see here, momentum is on the weekly chart is really bottoming. So this could actually, instead of looking for shorts, this could actually present, I could argue this market both ways. This could actually be presenting a short-term, long opportunity. So I hope that makes sense. This could be a fairly strong support level, although we've been knocking on this support level quite a bit. And when you knock on a support or resistance level so many times, the door is going to be open to it. So I'm not sure that that's going to happen this time. So we really need to watch this. What really makes me nervous for the shorts is that momentum looks like it's bottomed here. Although in a trending market, momentum can stay, over I just got tongue-tied there. I apologize. It can stay oversold for quite a while before ultimately resolving back to the high side. So this is a cautionary flag for the bond short trade for me. And if this pushes back up above the 20 and starts rolling back to the high side, then I would definitely, be looking at a test of some higher levels. Now, let's say we get a nice push back up to the high side and we come back down to this level, then I'd be really interested in looking if that level is going to crack, on the, let's see, you've got 1, 2, 3, 4. On the fifth, I don't know, about the 5th to 6th test, I'd be looking at that and saying, okay, maybe it's not going to hold that level, and it might be time to get short on a break of that level. So at this point in time, I'm very cautious. I think that this might be presenting a short-term long opportunity, and then looking to see where it's going to bounce to, and then possibly come back and see if it's going to break that level. So this is probably going to take, potentially weeks to play out. So this is more of a long-term analysis. So let me jump back and change this to the daily chart. And I'm just very cautious on this market here. Are there any markets that we did not cover? Any major markets that we should be looking at? I think we looked at. We did look at the crude oil. We looked at gold, silver. We looked at the key currencies. The dollar index, the euro. Well, the dollar index isn't really a currency. It's more of a basket of currencies. But we looked at the major drivers there in the currency markets. We looked at the USDCAD. We looked at the stock indices. I'm not sure that there are any other major markets that we need to look at. So I'm going to wrap up this video. Hopefully I covered anything. I don't usually mention this, but if you have any questions, or if you have anything that you want me to look at from an analysis perspective and cover in an upcoming video, feel free to email me through the meetup groups where you receive this newsletter, or through let's see, you can email me, Dave. Oh, this is terrible. Let me actually type this. You can email me at dave@markettradingconcepts.com. That's my work email address. If you have any questions and you want me to potentially analyze anything from a technical analysis perspective, with the understanding that this is not in any way, shape, or form any type of advice, then I'm happy to do that. So feel free to touch base with me, and we'll be kicking off the new season in September. Stay tuned for some of those announcements coming out. I'm just in the process of organizing the upcoming some of the upcoming meetings. So have a great and a safe August long weekend. I'll be off next week as well, substantially. I'll be in and out a couple times in the office, but I'll substantially be off. So I'll be looking to get back into the markets around, I guess it's Monday, August the 12th. I'll be getting back into things full time. So in the meantime, have a safe holiday, have a safe long weekend, good trading and investing, and we'll look forward to seeing you soon. All the best.